Like many of you, I'm new to the world of digital treasuries, and I'm eager to learn a bit about it today from Marcus Laun, who's one of the founders and the leader of Sky Quarry, and what this could mean in practice for future access to capital for Sky Quarry. Before we begin, though, this is a forward-looking presentation, and we have the usual caveat for forward-looking statements that I encourage all of you to read. But this is part of the risk assessments that we have to do in connection with being a public company. Nothing we say today should be taken for anything other than forward-looking statements. So, as a finance attorney working in the renewable energy sector, I've really spent my career on how we finance infrastructure and how we build it. And what excites me today about this discussion is a new possibility for infrastructure finance, for using cryptocurrency as a basis to link up assets, real world assets, and explore new pathways to capital. This is a relatively new tool in the tool belt for people like Marcus. It's a new and potentially extremely broad way to access capital and improve the capital stack for growing companies like Sky Quarry. And as adoption grows, this model probably will extend across the renewable energy spectrum to wind, solar, storage. It's exciting, especially in a world of uncertainty and sort of frequent and significant changes in the markets, in the federal and state infrastructure and in the legislation and policies that are attached to them. And so this, in some ways, is almost a way of, if the future of digital treasuries is a way to broaden markets and take government in some ways out of the picture, which is potentially a good thing. Not just government, but government, finance companies, and other people who have typically held a pretty strong grasp on how capital gets raised and how capital gets deployed. But I'm like Phil Hartman. I'm a caveman. These strange world of digital currencies confuses and frightens me. Unfortunately, we've got Marcus Laun here, who is has a long history in capital finance, and is on the leading edge of this. And it's my pleasure to introduce him to you today to walk us through what the future might hold for Sky Quarry and the use of digital treasury. So, Marcus, take it away.
Awesome. Thank you, Lloyd. Let's start with that. What is a digital treasury? And next slide. Might as well go to the next slide. Here we go. The digital treasury, you might as well go back into the history of digital treasury a little bit. Kind of the first one was MicroStrategy. And if you think about his motivation in putting Bitcoin on his balance sheet was as an inflation hedge. He didn't like holding dollars in his company because he felt that the dollar was being eroded in value through the printing press, and felt that Bitcoin was a better alternative. And so MicroStrategy really kind of kicked off this whole thing where investors were willing to pay a premium for access to Bitcoin because it was wrapped in a corporate structure and had the clarity of that strategy and that company involved. And I think that's an important thing to think about when you blend public companies and cryptocurrencies, because crypto, I truly think that this is an inflection point for crypto, because I think historically, people were nervous about crypto because there wasn't a lot of clarity, there wasn't a lot of disclosure, and you had a lot of bad actors involved in the space. And now, with government support and by taking these cryptocurrencies and dropping them into a public entity that, you know, has legal obligations, fiduciary obligations, reporting obligations, audit obligations, and then can trade on public markets, it really, you know, starts to become the best of both worlds. And you know, I think that's an important theme to take through our discussion today. So a digital treasury is purely taking a digital asset or a digital currency and putting it on the balance sheet of a public company. So, you know, MicroStrategy was the first one, and now we have, I would say, close to 200 public entities that have digital currencies on their balance sheets, and most of those assets are Bitcoin and Ethereum, but you know, the altcoins are starting to get put onto balance sheets as well, and that's interesting. So yeah, what does that represent? It basically creates more assets that a company can leverage off of or create as security, and I think that is going to be, you know, the big bellwether for the micro cap public companies that are able to put these currencies on their balance sheet. You do a transaction, and all of a sudden, you can kind of evaporate some of the risks around insolvency for these companies. So you put, you know, 100 or 200 million dollars worth of crypto on a balance sheet that's risk-seeking money, and all of a sudden, public market investors see that treasury as a cushion to protect, you know, the equity interests of the shareholders. So I think, you know, that's a big driver for these transactions in microcap companies. Yeah, and obviously SkyQuarry has indicated an interest in doing a digital treasury transaction to bring some digital assets onto the balance sheet, but there are other components of our strategy that we'll talk about as well that play a hand in this and truly speak to what the next generation of these digital treasury companies will look like. Next slide, please. So digital assets are, you know, tools that can streamline how institutions manage their finances. So, you know, ultimately, the digital treasuries will combine with businesses around the various tokens that are held on the balance sheet. So most of the early digital treasury companies that you're seeing now are bundling a bundle of assets or a stack of tokens along with a business that will interact with the tokens or operate the tokens in a way to generate cash. And those, you know, platforms can be transaction oriented or yield mining, essentially. So taking those tokens that are on the balance sheet and depositing them and staking them for yield to generate income for the public company or for the management company. Next slide, please. So here you see some of the money flows and who controls them and how it would work on the digital side versus the traditional side. And I think, you know, what you're really talking about here on the digital side is, you know, when a public company is going to use a digital treasury, they actually get the best of both worlds, because as a public company and a reporting entity and a listed entity, you get all the benefits of the traditional rails that exist for, you know, capital formation and trading and liquidity, but now you get a new dimension of you know, digital transactions and digital assets, and we're in the process of, you know, identifying which groups we're going to work with to create those rails and what transactions we're going to support with digital assets. You know, one of the key things for us is to look at tokenizing or digitizing some of the assets that we have on the balance sheet that don't necessarily correlate to dollars on the balance sheet. So, you know, we have counterparties that have expressed interest in digital assets or non-cash assets that they will use as collateral or as a means of exchange for transactions. And this is truly a game changer for any small company, because all small companies struggle with working capital. And as soon as a counterparty or a business contact will take an asset that isn't traditionally used as collateral for a transaction or a security, you now are creating additional working capital for the company. And the more working capital a company has, the more business it can transact. So, a traditional company that has a 30 or 60-day turnaround on its working capital is limited in the amount of revenues it can generate by that working capital, how fast it can turn over its working capital. But if all of a sudden it can monetize or digitize its assets to create 10 times as much working capital, now you've increased the opportunity of that company to do business. So now with additional working capital, it can grow its business exponentially. And I think that is, not what's part of the discussion in the digital treasury space right now, because people aren't really grasping that. We're still in version 1.0 or 1.2 on these digital treasury companies, where they're just focused on putting a bunch of crypto on a balance sheet and everybody's amazed. But what's really going to unlock the value here, unlock the potential, is the amount of business that can grow through these opportunities. For example, we're looking at digitizing energy transactions for our company, and then doing that as a service for other companies. I estimate there's about $300 billion tied up in working capital for energy companies in the US. And most of these companies have massive assets that could be digitized. So you could increase the working capital of the energy industry in the United States just through digitizing assets that are not able to be used as collateral or as working capital today, because they're stuck in a physical form essentially. So this is really what's exciting about what we're talking about here. Next slide. I think we've covered this. Again, vast amounts of capital are locked up in working capital, and essentially slow and reduce the number of transactions a company can do. So to unlock this and create new, I would say, structures and securities that are investable. Small companies, micro cap companies struggle to borrow money, and if they're not investment grade, they're paying usurious rates of borrowing costs just to operate. And if you can bring more borrowing and lending opportunities and investing opportunities to a broader audience, you're obviously going to reduce the cost of capital for these companies and reduce that friction in the market. We've been very successful in crowdfunding, which is effectively a digital strategy. We're also, we've also just recently created a preferred stock around our refinery. All these transactions obviously operate in a digital space, don't create a digital currency or a digital token yet, but the tokenization is what's coming in the future. So, we're already at the forefront of the opportunities that this represents, where you're disrupting the traditional pathways for companies to raise money, and we'll be able to use those techniques for ourselves, and then license those techniques to others, and help them grow as well. Next slide. So again, how do digital treasuries drive growth? Obviously, cash management, financing tools, tokenized instruments. This is what we're really interested in. We already have some of our suppliers that are interested in receiving tokenized instruments as collateral for transactions, and we're working towards that as a goal. And then transparency. Everybody loves to be able to see things digitally and see how things are moving through a process. And as we expand our operations from purely oil refining to the shingle recycling business, there's a lot of opportunity to tokenize the recycling process, as far as proving that certain waste materials are recycled for regulatory purposes. And then obviously in carbon capture or carbon credit is all going to be tokenized at some point in the future, and we're already talking to those providers on a weekly basis. So there's a lot of opportunities to grow the business using digital tools and create efficiency and reporting. Next slide. So again, I think the real driver on growth for these things is you're going to see an ability for small companies to access capital much more easily. You're going to access, hundreds of billions of dollars that aren't currently available or aren't efficiently accessible. You have, platforms like NASDAQ have recently increased their listing requirements up to a $15 million requirement for an IPO. And, as, traditional pathways, create more bottlenecks, you're going to see more and more opportunities for workarounds and different ways to do this. The blending of a digital token system and digital treasuries with public companies is fantastic, because the public then gets all the clarity and reporting and governance that comes with the public markets. But now the companies underneath that structure can access capital in dozens of different ways across borders and using customized securities and smart contracts. The opportunity here is amazing. So this is not a flash in the pan type thing. This is going to mature, and I think what I expect now is, I think we've seen the first generation or the first wave of investors play with these digital treasuries, and I think what's about to happen over the next 6 to 9 months is it'll a lot broader awareness will start to happen for these kinds of opportunities, and I think it's going to be a lot of hard work to figure out which companies are winners and which companies are losers, because a lot is going to hang on the management teams, and a lot is going to hang on the development of these pathways, which won't readily be understandable unless you can really spend a lot of time to learn the differences between the companies. You're not going to be able to, everybody's kind of looked at these digital treasury companies and valued them based on the asset value of the currency, or the tokens, or the crypto relative to the market cap of the pubco. And frankly, that's only part of the picture. The real sizzle that you're going to get out of these deals is who's leading the ship, and what businesses they can build around that platform that they've been handed. And I think that's going to be the real driver. So you're going to have to do your homework on these things. Next slide. So this refers to net asset value again. And I guess I jumped ahead a little bit here. So you start with net asset value, which is, the balance sheet effectively, what amount of crypto is sitting at the company. And, but ultimately the blend of using the crypto, and then what business you're going to create within that public company. So you have to match the business model, with the crypto that you're warehousing, and then have a business that is synergistic between the two. So whether that's transactional, whether that's money management, whether it's energy, whether it's data centers, you're going to have to find management teams and find business opportunities that match the token to the business model, and create that synergy. So that's really the top of the pyramid, where you're going to drive that exponential growth and that increase in valuation. Is what is that flywheel that generates recurring revenue and profit for the investors. Next slide. So in our view, the digital treasury for us is a number of different opportunities. We're really evaluating a bunch of different ways to go. We've been approached by numerous players in the industry, offering different opportunities as far as which tokens to put on the balance sheet, et cetera. We're really focused on aligning with a project that is beneficial to our business model, and would ultimately create leverage for increasing our own working capital, getting recognition for our assets that we have on the balance sheet, assisting us with the environmental components of our business, whether it's the recycling of shingles or carbon capture or carbon credits, So there's really a number of different foundations that can offer us tokens and support that would help us unlock these things. As I said, we've raised a lot of money, from the crowd, and crypto really is a crowd-sourced, crowd-funded effort in its legacy, and we're aligned with that, and we intend to continue with that, and to create unique opportunities to lend, stake, invest, and take ownership of what we've built to date. I think is really where we're going as far as a digital treasury, and really unlocking the value that we've created in a way that is different than just traditional debt and equity that we're currently constrained with through the traditional capital markets. So we're really excited about where we stand. One of the things I should talk about is my experience in this space. I've done a lot of advisory work on tokenization, on uh, exchanges and managing of exchanges in the crypto space. So I'm pretty familiar with this stuff, but I also have 20 years of capital markets experience, working on Wall Street. So I understand, the Wall Street engine and how capital formation works on that side. So combining those two viewpoints, I think, is a valuable way to look at, what's happening here, because, these crypto opportunities are ultimately going to change, the pathway for Wall Street permanently, and the traditional gatekeepers will no longer, be able to force business through traditional channels that are either expensive or laborious. We're going to see much more efficiency in capital formation. You're going to see the U.S. attract a lot more capital into its businesses through these processes, and therefore, we're going to be able to grow the economy, and this is going to be a significant driver of growth going forward. Lloyd, I just talked for a long time.
Yeah, I feel less like a caveman. So thank you for that. So a couple of questions, Marcus. Let's be clear what this is and what it isn't. You mentioned 1.0 and investments in Bitcoin. Is your intention here to actually speculate on Bitcoin or Ethereum or something like that, or instead to use that functionality to what? To essentially to tokenize existing or future Sky Quarry assets and use it as a platform to raise capital? I mean, is it speculative, or is it a finance procedure, or both?
It's both. So I think we're being approached by people that want to put cryptocurrency on our balance sheet and help build a business on the crypto side with us. That's obviously interesting, and but you have to take a look at all the transactions that have been done to date. A lot of these transactions are effectively Me Too transactions, trying to ape what MicroStrategy did, and ultimately you're going to have to innovate, and you're going to have to differentiate to actually be successful. Otherwise, you'll just be an also ran. So a lot of the transactions that you've seen have just been a run for the exits, because, or not for the exits, a run into these deals, because if you got in at the right time, you could make 5 times your money in a couple of weeks. And but we don't see that happening at all, or as much going forward, because a lot of these crypto treasury deals are actually being financed through at the market equity offerings that are just being used to buy crypto and load the balance sheet that way. So I think what you have to do is you have to do your homework. You can't just look at all these deals and say, I'm going to buy this one because it has more crypto on it on the balance sheet relative to the share price, or relative to the the number of shares, and you want to separate the value of the asset and maybe the yield that they're creating with the asset from you ultimately, you're going to have to do a discounted cash flow and evaluate the business that they think they can build off of that platform. And it's just like looking at an oil company and saying, you look at the digital assets on the balance sheet as a reserve or the asset, and then what are the profits that can be generated off of it, and that's the future value of the business. So, did that answer your question?
I think so. Part of it. I'm still wondering, and how um, so if you're investing, say, purely in Bitcoin or Ethereum and it becomes an asset on the balance sheet, then I think I think I understand that process. I think the investors may wonder whether that is like the right use of capital and whether that becomes something that's separate from what the core business is. Is that
Mhm.
now a new business? So maybe we just address that first, and then I want to get to more interesting questions.
Yeah, so all these digital treasury deals ultimately come with a management team that's going to run that digital asset, whether it's under contract or in-house. And but I think for us, the real opportunity is to actually blend the potential of a digital treasury with what we actually think we can do in the energy business with digital assets. Our facility in Utah is sitting on hundreds of millions of barrels of oil, and we don't get much value out of that on the balance sheet. But if we could create a token or a cryptocurrency that was tied to that resource, then people could buy a hydrocarbon linked token or a hydrocarbon linked coin that would then uh, be inflation protected because it would rise with the value of oil as opposed to being tied to the value of a dollar. And if we had that token minted and we had consumer acceptance of it, then we could use that token on our balance sheet to provide collateral to our suppliers. So then we could buy resources and supplies and other things and provide collateral to our counterparties so that we don't have to tie up our cash to do it. So we could go from turning our capital every month down to every week, and that would enable us to increase our revenue by 400%. And we could take those tools as far as uh, the 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 user interfaces, the databases, the tokenization techniques, and license those techniques or share those techniques with other energy companies so they could do the same thing. All these small companies across the United States are constrained by capital. They can all do more business than they currently do if they have more working capital to attack the opportunity.
Yeah, so I see interesting. So the expertise part that you may be able to license out to other energy companies, I think that's especially if a team gets developed. I think I get that. One question though is if you actually tried to tokenize, say the future oil coming out of the refinery, how do you do that in a world where you've got, say, an all assets pledged to a lender? Like doesn't that create a lien on the assets that have already been pledged to somebody else? How do you reconcile that capital stack with your existing debt? That's the part I don't understand.
Obviously, you can't commit assets to multiple parties at the same time, but ultimately, if there's an opportunity that's more efficient as far as committing those assets to other places, the current standard as far as committing assets and these blanket kind of liens and is terrible. And ultimately you have to get into a position where you work your way out of it, or you do a wholesale refinancing where you say, hey, I have I've given somebody my entire resources collateral on a $3 million loan.
Yeah.
You could basically go to the market and do an offering on the token side where you don't break escrow until you hit that $3 million mark, and the payoff on the lien is contingent to the closing. So it's part of the actual closing. So you do it in one fell swoop. You can't close on the money unless the asset's free and clear, and you basically have it happen concurrently. So there's lots of ways to do that, and ultimately I think private market lending or staking is going to end up being a lot more efficient than the current corporate markets. You have the decimation of commercial lenders and commercial banking across the country. You've had so much consolidation in the small banking sector that there are no small banks left. As soon as a bank gets big enough, it gets bought by another bank, and then both of those banks only bank with bigger clients. And you'll be able to create ecosystems within regions where you're going to be able to drop the borrowing cost from 30% to 10%, just because you're going to have a lot more people competing to provide that same capital, but they'll be able to do it a lot more efficiently and evaluate the credit, and because it'll all be digitized and on chain.
Yeah, yeah. So a rollout of this strategy would inevitably be tied to a broader sort of corporate reorg and a takeout of the debt, just so that you could essentially facilitate, essentially free up the asset, leverage it in a more efficient way, and take out some existing constraints that current lenders may have.
Right.
So
Or
how
tap into, you can hopefully, as a business, you always have some assets that nobody has a claim on as well, and you use that as a starting point, right?
yeah,
Our oil, and we've never secured any of our deals with our oil in the ground because, everybody's always wanted, to look at our hard assets first and foremost.
I see. So there's no real all assets play, or there's carve outs. Like the oil in the ground is not subject to a lien. So you
Yeah, obviously it's going to depend on the company, but in our case, yeah, nobody secured our oil in the ground.
oh, okay. Well, this is helpful. So a couple of questions have come in, and they're basically like, how does this sounds great, but how does this raise our stock price? How does this affect the current stock price? But I think part of what you just said sort of leads into an answer, but maybe you can expand on that.
Yeah. Obviously, the more we can tap into this, the more we can reach a broader audience as far as our business, the more we're going to attract investors. And the fact is, our stock has suffered, partially because there are market makers that have effectively targeted us, or hedge funds that think we're in dire straits and we're not going to make it. So more efficient capital access gives us more opportunity to succeed, and to fix our stock in the near term, we're just going to operate our way out of it. But we do see opportunities on the digital side that could open big doors for us and turn the stock around, and we're excited about that. So one thing that has been brought to me is the digital strategies that we're talking about in no way interrupts our business plan as far as targeting the shingle recycling opportunity, operating the businesses that we have, getting our Utah facility up and running, which I think is my number one priority, and really growing the business efficiently. And growing the business efficiently always stems off of reducing, increasing the amount of business you can do with the working capital that you have, and getting people to accept non-traditional work sources of working capital is going to be a way for us to grow that business. So it's we're striking a balance, but everything that we're doing on the crypto side is in no way going to slow us down on the traditional business plan that we have going forward.
Yeah, maybe as we finish up, Marcus, you can give us some updates on Foreland, on where things are going. But I do want to sort of dig into this a little bit more. On like, it seems to me like if you have a if part of the strategy is to use as an asset Bitcoin or Ethereum or some other crypto, then is the broader company asset umbrella put at risk by the speculative nature of that asset. Like Bitcoin today is 108,000 or whatever it is, but tomorrow it might be 60, or tomorrow it might be 220. And so adding that volatility as part of your assets, does that contribute to more or less stability for the company as a whole?
Well, I think if we had 50 million or $100 million worth of Bitcoin on the balance sheet, I think people would look at the company as a more stable entity because we have those assets on the balance sheet regardless of the volatility. And it's just like, you have an oil asset or you have, oil production, you can always hedge that. You can also use techniques to hedge crypto volatility, especially on Bitcoin. It's a pretty liquid and deep market. So I think having more assets, regardless of the volatility of price, would give people more comfort. But obviously it does add a measure of volatility around how people are going to value that in the context of the entire business. We went public at $100 million valuation. I believe that's our valuation today. The public markets don't agree with me, but that doesn't mean that the value of the assets is any different.
Mhm. And so how would you get the capital to access or to buy Bitcoin?
But ultimately, these deals are done with private placements, so you're really just issuing new shares to bring the assets onto the balance sheet. And depending on the tokens that you're going to do, you can either buy them at par, and if you're going into like more of an altcoin situation where it's not Bitcoin or Ethereum, you can often get these tokens from a foundation at a discount to face value, so you can build in a little bit of a profit effectively there.
Um, how is this? I can see. Okay, if it's use a private placement um, to purchase some Bitcoin or Ethereum, that I can see being non-dilutive. Um, but how would a sort of a shareholder look at these options that you have for using digitized assets and say, like, how is this going to be non-dilutive to me?
Well, ultimately, if you're doing a private placement and issuing shares, you're increasing the share count, right? So it's a matter of making the sale of those shares seem accretive to the investors, right? So ultimately putting assets on the balance sheet and paying for them, will increase the stability of the company and increases I would say, the awareness. I think we're in early days on these digital treasury plays, and you know I think frankly, I think the value of these companies is going to represent about 20% of what all crypto is worth. So I'm looking at crypto treasury companies to be in that $800 billion valuation level in the future, because I think a large portion of the investing community would like to have exposure to crypto, but also to have the luxury of the reporting and the governance and the capital markets around it. And so I think it's a good match. And I think if you have a quality differentiated business model around crypto, combined with a bricks and mortar business and a strategy for them to work together, I think that's a story that retail investors can embrace.
Yeah, I wonder if it's a concern to you and to the management if you went down that road and then the price of Bitcoin or whatever it is you invest in tanks. Like, are you worried about shareholder lawsuits? Has that sort of been something that the market has experienced yet, or is it still sort of too soon to know? What are your thoughts on that?
No, again, I think it's too soon to know. Uh, everybody can sue for anything at this point, but I think for me, what the digital treasury is interesting as far as bringing assets onto the balance sheet, but if we were able to create tokens that that valued, our, say hydrocarbon assets or, future, waste credits, etc. If we were able to tokenize that and quantify that, people would apply that overall valuation to the company. Right now, we're really getting no credit for the assets that we have, through the public markets. And so the more, kind of clarity and the more understanding people of our assets, if we could tokenize our oil, the adjudicated net present value of that oil is $160 million, and we're getting no credit for that oil, in the capital markets today. So, any digital treasury strategy that would involve tokenizing assets that are not understood by, public market shareholders is going to be a benefit to the shareholders, because then investors can, slice and dice the company and see what different assets it has on the balance sheet, and understand better, how the public would look at those assets, and what the future value of those assets is.
Yeah. Yeah. That strategy I see as being one is in the future, and especially if the asset pool that you're thinking of that SkyQuarry already has is unencumbered, and now you're really just looking for ways to exploit its value through these new capital markets. And there
Yeah,
I can see getting a lot of investor buy-in. I think, in the comments that I'm and the questions that I'm seeing, there's certainly a lot of folks who are like, hey, don't go buying Bitcoin. Great to use crypto as a way to, attach an existing asset that may be undervalued or non-valued, and try and exploit its value. But, that part isn't speculative, but investing in Bitcoin certainly seems to be. Um, what else? Uh, yeah, well, maybe speculate a little bit, or that's how would this work, or how could this work, Marcus, in the current foreland uh, context with the preferred equity?
sure. Yeah, so if we, could, uh, essentially parse out, or create a token or security that would be accepted by our suppliers, for example, right? Uh, so that we could, issue them or deliver to them, a digital form of collateral that would allow them comfort as far as how much oil, we receive from them on a weekly and monthly basis, so that, we don't have to put up, cash collateral in exchange for receiving raw materials for our facility. That, could allow us to increase our production, you know up to 500%. And so, that's how that could work. Yeah. The also, there's a lot of friction in the way these transactions flow between loading trucks, unloading trucks, measuring tanks, things like that. And if you could digitize, the business flow, so that it was much easier to make and receive payment, you'd basically reduce the operating costs of the business, because, a lot of the relationships between, suppliers and buyers could be, managed through a smart contract. So there's a lot of opportunities there, where we could even create a token around our refining processes, so that somebody could deliver us oil, deliver us a refining token, and then we could in turn, either deliver them, the value tokenized of diesel fuel, for example, or deliver physical fuel where they want it. So the opportunity to kind of rejigger energy transactions through this, has a lot of different opportunities. And then, you can obviously take what we build and license it to, the hundreds of other energy companies that could also, increase their business by, tokenizing assets that they have on the balance sheet, but don't necessarily, can't necessarily borrow against or transact against as collateral.
So the IP that you have and this could be tokenized and essentially almost licensed through tokenization. But also too, it almost sounds like, and maybe you can expand on this. This sounds fascinating to me. Is that you can? It's essentially a portal. You don't have to transport the diesel. You could just transport the token, and that's at zero cost versus the time and expense of moving actual physical assets.
Correct. Or
Uh,
you could have, you could have a network where, somebody could receive oil in, Louisiana, and something gets
mhm,
delivered in Wyoming, right? Where you have an exchange mechanism.
mhm.
So the team that we're working with on the tokenization side, has done, numerous platforms and exchanges for the cryptocurrency space. And so tokenizing, hard assets is going to be easy for them.
What are some of the risks, Marcus? Cyber risks, or you hear horror stories about people whose crypto wallets get broken into on Coinbase or whatever, and
Mhm.
they lose their investments. How do you guard against that? What are some of the latest strategies and techniques?
Well, ultimately, as we start, we know who our counterparties are for everything that we do. So there's going to be effectively a manual backup. And just as a public company, you're going to have redundancy, and you're going to have auditability, throughout the entire process. So it's not like we're going to be hacked of an oil reserve that's 6,000 acres in the middle of Utah. Six
Yeah.
thousand acres in the middle of Utah. So it's I think at the outset, I think we're pretty protected. I think, once we, would expand to the point where we were licensing products to other people, and handling, their transactions, I think there would be more risk there, but, we'd also have, much more experience as far as, handling those deals.
Yeah. Yeah. Um, I'm wondering if maybe you could just take a few minutes. I'm going to scroll through a couple of questions, but a couple of folks, investors here, have asked about an update on the PR Spring and the other facilities. You want to maybe just touch on where things are for maybe the balance of the year?
Yeah, so we're continuing to make incremental steps at PR Spring. We are, in the process of looking for the capital to make the big moves there. But we're confident that we're going to be doing some significant construction and making big progress before, over the next 5 months, say, and we'll provide news on that. There isn't much left as far as a retrofitting. As we've said, 65% is done. So it's a pretty short time window, and we're looking forward to that.
Okay. So maybe in terms of next steps for Sky Quarry, Marcus, on the digitized treasuries side, what do you see? What do you see happening?
I think we're going to keep working on a white paper and looking at tokenizing some of our assets that we can actually use and effectively a beta test. Like I said, we have partners that are interested in receiving uh, some of that and testing it out. So that's really where it's going. And then obviously continuing discussions with foundations and counterparties that are interested in collaborating with us and helping us on our journey, basically.
And are these strategies, are they tied to, are they like crypto agnostic? Can you use any number of them? Do you have to be committed to one versus another? Like, how does that work? I have no idea.
So there's certain kind of projects that are really focused on either tokenization or tokenization of real world assets. So we're taking a close look at those. Other than that, moving up the food chain, we're also looking at tokens that the market would see as as money good assets or as bankable assets. So it's really a combination of the two. Yeah, if you spend your time and do your research, you'll really see that there's a real kind of resurgence and excitement around Ethereum, really being the disruptor of the banking industry, and so is therefore going to be extremely valuable and obviously usable in a transaction environment. So we're really looking at, we don't want to push away any discussions. We're kind of talking to everybody, and once we see something that really fits, then we'll move forward.
Yeah. Yeah. I've been hearing the same for Ethereum for, probably 10 years now, that it's like it is the potential to be the financial system disruptor. But you know, hopefully it comes to pass. But all right. Well, I think we've maybe, well, one other question is, like, how does this really relate to the core business? Is this a shift in focus, or is this a complement to the core business?
No, this is absolutely a complement to the core business, and we're focused on our business model and monetizing our assets and delivering on the promise that we communicated over the years. This is really ultimately adding another kind of couple of arrows to the quiver as far as how we achieve our goals. And we do have a lot of opportunities, and this is just part of what we're offered. And I do think that being first and foremost, helping build and making building these techniques will reduce our cost of capital and increase our working capital so that we can actually increase revenues. And so that is obviously a way that we can grow our business.
All right. Well, I think we've hit the high points. Look, I don't see any other big unanswered questions, Marcus. I want to thank you for taking the time to set up the future for the investors, and we look forward to seeing on the next webinar how the plans have played out. This is exciting times.
Thank you. I want to thank everybody for taking time out of their Labor Day weekend and sitting with us. We appreciate your support and appreciate your time.